Hello, good afternoon, everyone. My name is Ngozi. I'll be taking us on I'll be teaching you financial accounting. For those of you that want to write exams in ICANN, I teach financial accounting. So, in case you want one-on-one tutorial on financial accounting foundation class, please kindly send me a mail. My mail is Z. No, I'll give my WhatsApp number 07084551965. Okay, so that's that. So I'm an accountant. I've been lecturing financial accounting for some years, over 3 years, and the pass rate of my students has been very, very high. I have taught in tutorials in such as Bratim tutorials where I take financial accounting. Okay, all right. My name is Joseph. Let's get on to our class for today. So this is our introductory class. This is our first class, and the aim of financial accounting is to ensure that we're able to equip the students on how to prepare financial accounts for both sole trader, partnership, non-for-profit organizations such as NGOs and companies. So this is our introductory class. Now, so today we'll be talking about business and types of business. That is our first class for today. I will leave in the description box an overview of what we'll be covering. However, you can check the ICANN syllables. There you will see everything you ought to know. But I also put a description box and detail what we ought to know for the financial accounting class. So now I'm talking about business. What is business? Business is basically an economic system or organization or units whereby you engage in transactions that enable you earn profit. When I say transaction, I mean you involve in the buying, you are involved in buying items and then you sell those items for a profit or at a profit. Okay? Or you render certain services to them in exchange for money. So that is business. So business is simply put an activity, an economic, there must be the term economic terms deals with money. An economic activity or economic system whereby you provide goods and services, or you supply goods and services, or you get to provide you supply goods and services in exchange for money for a profit. Okay, everything you're doing in the business is to enable you make profit. So the key term we want to see is economic system. There must be that term, economic system. There must be supply of goods or services, and then there must be profit. So these are the things they want to look at. These are the things that you should be. These are things to ensure you should indicate when defining what a business is. Now, three types of business. There are three main types of business. Okay, we have sole trader, which means one man business. We have partnership. Okay, partner means two persons are involved, at least two persons are involved or more. All right, then you have company. Okay, now these are the three main types of businesses that we have. Now I'll focus on the definition of these businesses and the characteristics of these businesses, what differentiates them from themselves. Okay, now for sole trader, the same as the name indicates, sole trader is a business owned by one person. For instance, a woman that sells provision, she's a sole trader. She's the one that's in control of that business. She determines what happens in that business. If she owns it, she controls it. Is a sole trader. And sole trader is very easy to start up. Most solution businesses or any sole trader business, like pure water business, as the case may be. Pure water businesses are not one man business, but the point I'm trying to make is that most sole trader businesses are easy to start up. Meaning you don't require so much capital. You require very little capital to start the business. Okay, even when you require more capital, they cannot be as more as what is required for partnership or company. My daughter loves to talk, so she's talking right now. So that is one characteristic of a sole trader. Another characteristic of sole trader is that him alone or she alone enjoys the profit and the loss. Whatever profit accrues to him, okay, he's going to enjoy it, or whatever loss may come as a result of the business, he alone is going to bear that loss. Another characteristic of a sole trader is that him alone is responsible for the debt. Whatever debt that he's owing, he's liable for it. He's not sharing with anybody. He's liable for that debt. And because he's liable for that debt, because my daughter gets, so because he's liable for the debt, he's going to pay all the debt. And because the sole trader business, him alone is responsible. So whatever debts is due, he's liable for those debts. Even if he's a millionaire, he's liable for it. He's going to pay it. Another characteristic about sole traders is that, Mama, okay, like I was saying, sole trader, he alone is liable for the debts during the business. Whatever is the debts that is supposed to pay, maybe as a result of borrowing money from the bank, or collecting goods, collecting cash, collecting goods on credit from supplier, whatever is the debt due, he alone is going to pay that debt. He's liable for everything. And because in sole trader business, the owner of the business and the business are one, whatever debt is due, the owner, the creditor, could meet him anywhere he sees him. If his name is say Adamu, you owe me 5 million naira. Adamu has a contractual obligation to give the creditor his 5 million naira. He won't say, it's not me, it's the business. No. In sole trader, both the business and the owner of the business are one. So in that case, Adamu is liable for the business. He's liable for the debt. And he's going to pay all the debts he's owing the bank or whoever he has borrowed money from. That is how it works for a sole trader. Now, in the case of what other characters again do we have again? Control. He alone controls, he alone manages, he alone is liable, he alone enjoys the profits and the losses, he alone bears the losses. Right. So this is another good thing about sole trader is that easy to start up. It doesn't need so much capital as the case may be. You just start small and then you continue to grow from there. And also requirement based on tax laws, they are not really so firm like that on one man business. Okay, the legalities involved in paperwork involved in doing your business for a sole trader is very limited. Okay, maybe a few money you might have to pay here or there. As a case, if you're not even into parent, maybe tax, just a few things you have to settle in terms of ensuring that you're carrying out your business in line with what the law says. Very few legal requirements or registration requirements are required. That is that for sole trader. Now, for a partnership business, I said partnership. Partnership means two. At least two persons are involved in a partnership. Even when a man and woman decides to get married, two people, always a partner. Okay, so it's more than that, but the least amount is two. So, like sole trader is just one man business. In your partnership business, two to 20 people are involved in partnership business, and you see this most times in law firms. Okay, and they are called firms. Okay, anytime you see firms, you know that the partnership business. Okay, now that's that. Another characteristics of your partnership business is that those partners, they all contribute. They contribute capital that be used to start the business. There's normally a sharing ratio or an agreement must have been laid out, and that agreement will be signed. Okay, so for partnership, there's always an agreement binding them together, be it oral or written. Okay, but there must be an agreement, and it's very better to have it written and not just oral because most times people forget what they say. So it's better written down. Okay, we are going to run this business These are your responsibilities for partner A, partner B, partner C. This is how much you're going to contribute for partner A, partner B, partner C. So this agreement that I'm going to write will contain how they run the business, particularly the profit sharing ratio. Okay, the amount of capital each person is going to contribute, the role of each partner. Sometimes you can be in partnership, and then some partners are not financial partners, meaning that their duty is not to contribute financially, but their duty is to ensure that they contribute their intellectual capacity to that business. I've written the agreement to contain their terms, their profit sharing ratio, their loss sharing ratio, their capital, okay? And then I was saying that sometimes certain partners contribute financially, while others contribute their intellectual capacity. Everything that they agree on or how they intend to run that business will be written in that agreement, okay? In the case of liability, how much, to what extent is a partner liable? Some partners will be liable based on, most times, partners, that's why. Okay, so more partners will be liable. Partners will be liable the amount of money they contribute. Those things will be stated down clearly and they will all see it. Now, another characteristic of a partnership business. In partnership business, you also state the what is required, legal requirement. Registration requirement is not so much, though it's more, but more compared to sole trader, but it's not so much like that. Okay, so these are some of the characteristics of your partnership business. As dies, that partnership for that partner ends when a partner becomes bankrupt. Okay, also in partnership, sometimes you can transfer your partnership. If, for instance, a new partner wants to come in and another partner wants to go, okay, he or she can say, okay, I want to transfer a partnership to this person. Or in case maybe you have a son, that's a better example. If, for instance, I have a business, a partner, a partner to a business, I can transfer my partnership to my daughter. Okay, so that is how partnership works. It can be transferred. Okay, and you can also admit new members. And when you admit new members, all partners will be aware, okay, to be part of the agreement. So all those things, how you want your partnership business to be run, okay, will be written clearly in a partnership agreement for everybody to see and for all of them to know. Now, for a company, we don't partnership. Now, for a company, one peculiar thing about a company is that a company is separate from the owner of a business. It's a legal entity. Unlike your partnership and social, whereby they are liable, their liability is unlimited. As long as they are owing the creditor, they are bound to pay the debt. They are bound, and this is not for leaking. They are bound to pay the debt, whatever amount is. So the liability is unlimited. If it's 10 million naira, they must pay that 10 million naira. But in a company, excuse me, their liability is based on what is in the is based on what was agreed. Okay, before you enter a business, that's why it's called limited liability business. There's a limit to the liability. Okay, and then in the case of sole trader and one-man business and partnership, whereby the liability is unlimited. In company, the liability is limited. Okay, and here remember now, in the case of sole trader, whereby they are the same, that is the company, that is the business entity, and the persons involved are one and same. In your company, the business is a separate entity. It's separate from the business. Okay, so these are, and also in company, the shareholders are the ones that contribute to the capital. Their shares, and that shares sometimes can be made public to people. They'll come and contribute money and start the business. Those people that contribute money are shareholders, while those that run the business are managers, and they are different from the business. So Unlike your sole trader and your partnership, in your company business, the owners of the business are different from those that manages the business. Those that own the business are called shareholders. Those that manage the business are called managers. These are the characteristics how you can differentiate your sole trader from your partnership from your company. I hope we've learned a thing or two. In our next class, feel free to call me on my line 070-8455-1965. Oh, sorry. So that's the line you can reach me. If you also want private tutoring, I could do that. If you also want an accountant to help you record your books, look into your books, I could also do that for you for a very reasonable fee. So thank you once again. Don't forget to like, share, and subscribe to my channel and share my videos to other people. I'll be posting very good accounting lectures. And my lectures, I try to make it very, very easy and simplified so that it will be easier for us to understand. That is all for today. Have a blessed day. Bye. 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 You're making them short class. Now you're laughing. Now you're laughing. Bye. Good afternoon, everyone. So this is the summary of today's class. We talked about business and we talked about types of business and their characteristics. So I'll drop right into the characteristics using a code for us to help us remember the characteristics. And that code is COME BELR. COMEBELR. COME meaning for capital. For a one-man business, the capital required to start the business is not so much compared to other businesses. Ownership. One-man business is owned by one person. Management. One-man business is managed by the owner of the business, one person. Is easy to start. So that easy to start is making reference to like the capital too. So those are the characteristics of your one-man business. Then B means he alone bears the risk. Every risk, every loss occurring to the business, he alone bears it. He alone enjoys the profit. Every profit occurring to the business, him too alone enjoys it. Then R is for requirement. The legal requirement required for a one-man business is very limited, and most times the tax authorities and other relevant authorities are not so firm on them because they are just small scale businesses and they're starting their business, so they are not very firm on them. Okay, however, it's still important that they do what they need to do so that they're not penalized. Then that's R. Then L is for liability. Whatever liability is due in a one-man business, he must pay everything. So the liability is unlimited. So that's for one-man business, sole trader. For partnership, the characteristics still following the same order. C, capital. The capital is contributed by all the parties that form that membership, that form that partnership. They all come together. That's partnership. Ownership is owned by all of them that contributed to the business. So they are all the partners are all of them are the owners of the business. M is managed by them all. E is not so easy to start, but it's easy to start compared to a company. But that's not really a characteristics per se. Instead, I would say L, meaning for liability. Liability here is also unlimited. Every member is liable for whatever debt is due. Then the profit and losses are shared according to their sharing ratios. So the profit is shared by them all, the losses is shared by them all. Unlike one-man business, he alone bears the losses, he alone enjoys the profit. But here, the profit and losses are shared by all of them. And then there's an agreement. There's a deed that contains the agreement, how they are going to run the business. These are the main characteristics of a partnership. Now, the main characteristics for a company, I'll call it with the acronym LORM, LORM. L standing for liability. The liability in a company is limited to the amount of money that he has contributed to the business. Okay. Ownership. Now, the owners of the business are different from those that manage the business, and the owners of the business are called shareholders. Okay. Then the legal requirements. It's for the for company is compulsory. He must fulfill his legal requirements, and they are more firm, be it tax law. There's a company tax that they're supposed to pay. So whatever is the legal requirement accruing to a company, the authorities are more firm with them. Then the last word there, we have the M stands for managers. So the managers are separate from the shareholders. And one key characteristic of a company is that the business is separate from the owners. And that is why you have the same legal entity. Unlike other businesses whereby the business and the owners of the business, they are one and the same. Not in all cases though, but the point is that the liability in those cases are unlimited. But in company, the liability is limited, and so the business is separate from the owner of the business. Another key characteristics of a company is that they give out the ownership is based on shares. So sometimes they could decide to make it public, sometimes they might not want to make it public. But the point is that the way they own the business is by share. So you're going to issue out share, or that's when they want to make it public, or they pay, they purchase, they contribute. That's the capital of business is being formed by shareholders. So they contribute money. By virtue of the amount of money you contribute, you own a part of the share. So they say one share costs 1 naira. It means you can pay 1 naira for one share. If you want more share, you pay more than that 1 naira. So these are the characteristics of these are the characteristics of the types of businesses. So I hope I've made it a lot more easier for you. Don't forget to have any questions. Don't forget to send me a WhatsApp call, and I'll be glad to answer you and give you further clarification. Hope this has made your life a lot more easier. If you have any method you think teaching can be a lot more easier, let me know too. Bye.